We had a bit of economic data hit this week and it's shifted market sentiment a little bit. I wanted to do a stock market review and break down to do stock market analysis, what's going on with SPY stock, TLT stock, USO stock, and several others. Let's jump in and I'll kind of review stock market review, looking at the biggest charts of what's going on. We have Federal Reserve hitting next week, Wednesday, and then Friday, the big number. Will employment numbers be robust as they have been? And if so, how will that impact the stock market? Let's jump in. If you are just joining me for the first time, thanks so much. Make sure to hit that like and follow button. This is a breakaway channel from my original channel. This is stock market analysis and stock options, where I do stock market analysis. Make sure you also follow the links down in the description to my other two channels as well. Grab the free email newsletter on my website, dhtayloranalysis.com. For the stock market review for this week, the big news today was actually core PCE inflation deflator came out this morning. Personal consumption's expenditure inflation deflator. What is it? It's an inflation index inside personal incomes and personal consumption. It's the Bureau of Economic Analysis puts it out every month. The Federal Reserve prefers to see this than it does the CPI. The nice thing about the CPI is it comes in 2 weeks before this data point, so we get a heads up. But the Federal Reserve doesn't really watch the CPI. They look at the PCE. They're very, very similar, slight nuances. Here we're looking at the core rate, and the core rate continues to slide lower. I think I saw 3.3, 3.4% for the year-over-year gain, far above the 2% the Federal Reserve is targeting. That's something you need to kind of keep in context, that although this chart is moving lower, it's doing so slowly, and that's disconcerting. The bond markets, there's something going on with bond markets. If you look and follow TLT stock is pushing new lows. I've been selling puts, buying on the dip with TLT stock because I think we're pretty much going to mellow out right about here, and we'll see some profit taking. This could push yields lower and bonds, TLT stock upward. But for today, we saw some pressure in bond yields pushing a little bit higher. SPY stock, of course, SPY stock moved lower. And let's take a look at SPY stock itself. Finishing up the week on the down note. Now, the inflation number probably won't shift the Federal Reserve's thinking too much, nor the stock market. Next week, we get the Federal Reserve on Wednesday. And Monday and Tuesday, probably not going to see a whole lot of activity going on from the stock market. We'll probably move sideways. Maybe we'll see SPY stock move up a little bit. That's simply because you're probably going to see some pressure being relieved, and we're going to wait and see. But Friday is the big day. Even though Federal Reserve is really kind of the main focus, we get employment on Friday. With the employment data, this could continually show that the U.S. economy is quite robust, to the point where it's too robust. Unemployment numbers are still sitting around 3.8%. That is historically incredibly low. We used to think 5% was full employment. So at 4.5%, we're like, wow, this economy is really hot. We went down to 3.4%, which is exceptionally hot. And backing off a little bit to 3.8, that's not a whole lot. Should the unemployment rate move upward to say 3.9, 4, 4.1, that would be excellent news for the stock market. SPY stock would go through the roof. Simultaneously, if it maintains at 3.8, maybe even inching down a little bit to 3.7, which with some of the retail data and GDP data we got on Wednesday does suggest that retail is kind of increasing in volume, we might see some employment gains there. So 3.7 isn't out of the cards, but if we maintain 3.8 and we see a lot of non-farm payroll increases for the month, that could really send SPY stock lower hard. UVXY stock, So, despite the fact that there's been some movement lower in SPY stock, UVXY stock, which is the VIX, this UVXY is an ETF that you can trade that runs derived off the VIX, didn't really go too high. The moves lower were gradual, they weren't shocking. We saw some big moves upward earlier, but that really had to do with, and by earlier I mean a few days ago, that had more to do with what's going on in the Middle East. That seems to be contained, so the stock market itself isn't exactly getting spooked by those kinds of events. UVXY stock, I've been looking, I had, when it peaked up around 2050, I had been looking for about $15. Anywhere from say 15 to 16. I expect we will probably slide a little bit lower, downward below 17. We almost got there about Tuesday or so. I expect we'll probably be moving a little bit lower. I'm looking to buy some puts on this. I'll probably get in front of the market on say Wednesday or Friday and hope to see UVXY slide a little bit lower. TLT stock. This is the bond market. If you like to trade interest rates, TLT stock, TMF stock, same thing, smaller. These two stocks, of course, have seen a little bit of pressure lower today as bond yields kind of moved a little bit higher. But as I printed over the past, say, 2 weeks, start buying these dips. I feel like the 10-year moves and TLT stock and TMF stock trade off of 20-year and 30-year. I feel as if they're a little overblown at this level and that picking the bottom might actually work. I'm trying to put on some new moves with, say, credit spreads, where I can bring in a little bit with nominal risk. And that's something where, those are stock options. I'm looking below the market for TLT. I think TLT stock starts to trend a little bit back upward because I think that the bond yields are so high, bond prices so low. A lot of investors are looking at it and saying, why would I be involved in stocks? There's too much risk, very little yield. Look what I can get out of the 10-year. You're starting to see a lot of people step in and buy those, the U.S. Treasury debt down below with prices as low as they are. The risk on that is incredibly small. If the Federal Reserve raises by 25, 50, 75 basis points, eventually they take that away. So if the 10-year yield is trading at 5% and they push it up to 550, eventually the Federal Reserve drops it down to 450. Maybe you sit on it for some period of time. But you just bought a bond that will give you 5% with not much downside. You're guaranteed the 5%. So if during that period of time bond yields do move lower, you're sitting on more profits with a guaranteed yield of 5%. Given that, I think TLT has probably kind of seen its biggest moves and we should start seeing some buying on the dips. KRE stock, this is something I've been kind of taking a look at a little more conservative because KRE stock is the regional bank stocks. I wanted to kind of point this out once again. KRE stock, of course, as bond yields move higher, price moves lower. Those regional banks have to make up their book, their portfolio. They mark to market their portfolios, and if those bond prices are moving lower, they have to use money to cover that cost or that loss. So there's a lot of potential stress with KRE stock, the regional banks. What could happen is we could see a real big shakeup in the regional banks with losses. KRE stock with these higher interest rates could shift lower. It has moved a bit lower over the past couple of days. USO, oil, shot up, of course, because of Middle East tensions, has been moving back downward. There's tons of gas. One of my guys was telling me something about Oklahoma sitting on piles of gasoline. I've not verified that, but if he's hearing it, he doesn't really have his pulse on the market. But I looked up the price of gasoline, and sure enough, it's dropping pretty low. So therefore, there's buildup in supply in gasoline, which means there will be a buildup in supply in oil. USO stock would move lower. Of course, XLE, the energy sector ETF, would move lower as well. Gold, GLD stock. This is an ETF on gold. And as you can see over the past basically month, there's been a sharp move upward and it's kind of moving sideways. A lot of flight to quality with gold because of Middle East. Will Middle East tensions spill over? Probably not. The United States has made it clear that they're going to protect Israel. So if any other entities step in, it's going to get ugly, which would mean other entities would probably not step in full force, but may find other ways to get in. Could be interesting. I expect gold, silver, GLD stock, SLV stock to kind of move back downward, and I'm looking to play those moves. Finally, the US dollar index. As interest rates move higher, money from around the world shows up. This is expanding the M2 money supply, while at the same time, the Federal Reserve is trying to shrink its balance sheet, which by extension would shrink the money supply. So it's counterintuitive, but it's also kind of problematic. The fix for all this is higher interest rates. So as these higher interest rates draw on more money, the Federal Reserve may be forced to either dump its portfolio even harder or raise more interest rates. Should be interesting how to play this one out. You want to keep your eye on the US dollar index. Again, I think we've probably peaked a little bit here, and it might be safe to start selling off and maybe buying some euro or pound sterling. We'll see how that plays out, but I wanted to kind of keep that in mind for this stock market review. Keep an eye on Wednesday, what goes on Wednesday, and of course Friday, unemployment. Make sure you hit the like and follow button. Again, this is a new channel for me. I broke it out of another channel. It's growing quickly. Thank you so much for that. Make sure you follow the links to my other channel and my website, dhtayloranalysis.com. Get the free email newsletter. We'll see you in the next video.